Hey, what's happening, everybody? Welcome back to the channel. So we have the Fed minutes that happened earlier this afternoon. Wanted to break down a little bit what it means for crypto and what we can expect at the next couple meetings in terms of rate hikes. So we're going to jump into that, and then we're also going to close it out by taking a look at crypto and seeing where we are after Jerome Powell has spoke to us, as well as leave you with some key takeaways and things to watch for here as we move on. So let's jump in and let me dive into this article first. This is from Yahoo Finance, and this is really the lead here. Okay, so the Fed minutes show a strong commitment to 0.50%, 50%, 0.50% rate hikes in June and in July. So that is to be expected. Of course, things can shift, things can change, but that is what we're expecting to see at the next two meetings. Now, higher interest rates, of course, make it more expensive to borrow, which should, in theory, depress the consumption that is enabling companies to raise prices right now. The meeting minutes outline a strong agreement among Fed officials for further 0.50% moves after at least the next two meetings, which are expected to happen around the middle of June, June 14th and 15th, and July 26th and 27th. This is a little bit different in terms of how it usually goes, right? The Fed is usually not so direct about what it plans to do, as the institution often prioritizes having flexibility, right? To kind of alter their decisions based on what the data shows. But we haven't seen inflation like this since the 1980s. So the Fed has been very much more willing to offer public guidance here on its intentions to further rate hikes over the next couple meetings. And again, there was a quote unquote broad sense on the committee that further 0.50% moves should be on the table. Notice that wording, though, should be on the table for the next two meetings, meaning there's still a little bit of room there to change things if need be. But, it's really not impacting crypto all that much right now. We're still trading in this tight range we can see here. I'll zoom into Bitcoin here. It's at 29.7, and Ethereum just slightly below 2,000. The SPY didn't like it as much. The S&P 500, it did dip right around the same time the comments came out. So the stock market is being impacted a little bit by this, but honestly, this is kind of what we expected to hear. It doesn't really go against anything, or there's nothing in here that blindsides us, right? That's way out in left field that would deter us from making any irrational decisions or rational decisions as an investor. So a couple of the key takeaways too, basically, of course, the lead is most Fed officials saw the half-point rate hike as appropriate at the next two meetings, consistent with what Jerome Powell said at the press conference. There was also a robust discussion on inflation, which officials strongly voicing their concerns about the hardship it's caused Americans, as well as the risk that price increases will remain high. So they had a large discussion letting securities holdings mature. A number of officials support eventually selling the Fed's mortgage-backed securities, a move that would be announced well in advance if it were to happen. And then several officials also flagged vulnerabilities in markets for treasuries and commodities. A couple of policymakers, quote unquote, observed that the trading and risk management practices of key participants in commodities, in the commodity markets, were not fully visible to regulatory authorities, which could lead to significant liquidity demands for the likes of large banks, broker dealers, and clients as well. So that is what we have for you here in terms of what we heard from Jay Powell here this afternoon. And I just wanted to bring you up to speed on the overall kind of state of the union and what we pulled out of the Fed meetings. But as I said, it's not really impacting crypto all that much right now. We'll have to continue and see if that maybe is the case still tomorrow, because things can slowly materialize over time. But so far, so good in terms of, not having a negative impact on the markets. We've been here before, right? 28, 29,000. It seems like we've been stuck in this range. And, well, we have been for a couple of weeks now since the crash back on May 12th. So that's what I've got for you here in the update. Thank you so much for tuning in. Make sure you guys hit that like button on your way out and subscribe if you're new and you got value out of this video. Take care, everybody. I'll see you in the next one.